Okay, greetings everyone. This is Tansen. We're with the Brilliance in Commerce Trust webinar on May 15th, 2019. Welcome and thank you for joining us. We have a great day with another wave of knowledge from our illustrious speaker, Randall Hillner, and let's get started. For those of you who are new, we are a project of La Verite, which means the truth in French, House of Freedom International Natural Law Trust, and Liberty Debt Elimination System are the two main flagship products, and the Liberty system is mainly for United States. The trust is global, worldwide, international. We have lots of affiliations and special offers, so just subscribe to the newsletter if you haven't already. And that's next, I'll give that, but first we have the Worldwide Charter for Fair International Commerce, of which we're a member. We have a certificate there, as you can see. And you can see more information on that on the website if you haven't already. Today being May 15th, 2019, the next trust webinar will be June 19th, just around a month from now, the middle of the month there, Wednesday. And for past webinars, you can go to brilliance-videos.com, and house-of-freedom-trust.com is the generic site. If you are a new customer and you're planning to buy a trust, we prefer you go through the affiliate who gave you their link, and you get better service that way. And at the same time, for those who don't have a link, that's the one you can use there on the screen. For those who have not already subscribed to the newsletter, go to that website and click on newsletter sign up. For those who need a phone number, 360-200-7521 is our company number. And it's mainly a message number, but we do return calls and we do like to communicate with everyone who wishes to talk by voice. You will have the opportunity today to talk by voice if you wish on this webinar by clicking on the link to raise your hand or by those who called in by telephone, *9 raises your hand, but that'll be in the question and answer section. So it's in about 20-25 minutes, we'll go to that. My name is Tansen Fairmont. I'm the founder, member of the Board of Advisors of Monaco Management Group, speaker on various radio shows, offshore investment seminars, author of Sovereignty Consciousness, and the forthcoming Cosmic Renaissance. The International Natural Law Trust is international because of the fact that it's not limited to any particular jurisdiction. You can state the jurisdiction in it as you wish if you wish to designate one. Otherwise, we just leave it according to the common law. And the common law can be that of a particular area, but it does not subject the trust to it for its existence. It does not derive its authority to operate from common law or any natural law or any human law, but rather from the universal principle of the right to enter into private contract with each other. Asset protection ensures that the assets you have worked to accumulate are legally safeguarded from third parties. So the International Natural Law Trust is one of the creme de la creme, one of the state-of-the-art asset protection instruments on the planet. Randall Hillner is director of our trust department and founder of House of Freedom Trust, White Light Unlimited, trustee of One People's Public Trust, creator of International Natural Law Trusts. Today's webinar is about, is it hours or minutes? So you're going to learn a lot about minutes today. And Randall, I'm going to go ahead and unmute you and ask you to start your video.
Well, welcome everybody, and welcome to the island of Kauai. Welcome to our Zoom broadcast, where we'd like to impart as much knowledge as that we have on a personal level and as a group level to give you what you need to have a trust that's dynamic, it's stable, it's one of the best there is, and we'll get right into it. So whenever you're ready to show those signals, we'll make it happen.
Okay, let's go back to the screen sharing. That it?
I have it.
Yeah.
Okay, most of it. I got to move it over a little bit. I've got all the images in the way of the slide. Can you help me with that?
Oh, well, I think each of us moves our images around. When you're co-host, you can move the images around by grabbing the top of it.
Well, that's okay. I can make it happen. Okay, so we're not talking hours here. I mean, we're going to spend about a half an hour at least talking about it. But what we're going to talk about are minutes. And we have two parts of the trust, basically. Um, you have to have the stable part that once it's signed by the grantor, nominee grantor, or the creator, that's the stable part of the trust. That's the intent that the grantor or the writer of the trust had in mind when he put this document together and set it up for the nominee grantor or the grantor and trustees and beneficiaries. And those all change for everybody's trust. Some of you it may have same co-trustees, but mostly when you have your own process happening, you have two people that are different from everybody else. So here we have the stable part, which is the trust indenture. So basically the first 11 to 13 pages of the trust document, it's basically outlines, and actually thinking about having maybe next month's seminar would be specifically on the trust indenture to explain to those of you who have a trust and maybe don't that this is why you would make it all happen. And I know some of my clients have read it and get confused, so I help them get it unconfused, and some of my clients really haven't read it diligently. So I hope that I can emphasize today that the process of the minutes and the whole trust document all play together. So we have different sections of the trust. The first part gives it the static stableness, and the rest of the 3-4 parts after that are the dynamism of what the signatures are, who is involved with the trust, what you want to do, the minutes, which is where you make decisions, which we're going to talk about this afternoon. And then the beneficiaries. Who are the beneficiaries? How much are they going to receive for the benefit of this trust, which can be done on any basis at all. If it's a very active trust, is a very active business within the trust, then it could be monthly, could be quarterly, or some trusts give yearly dividend payouts. They're not dividends like in stocks, but they're beneficial units of beneficial interest, and those are paid out by a check to the beneficiaries for whatever the trustees have decided. They've made a particular amount of money on the assets in the trust, in their investing ability. They want to leave some in the trust to grow as principal, and they want to give some of that new earnings back to the beneficiaries, and so they would give them out as units of beneficial interest. So those are basically what we want to see within the trust. And so when you look at your trust, you're looking at the first 13, 14 pages. Some are a little bit longer, but basically at the end of that first signature, you come to a page where it sums everything up, and it's dated, and it's signed by a person. Typically it's signed by the person that's establishing the trust, or it could be the nominee grantor that's creating this document, trust portfolio. And so it could be one of those. It could be another trust. You may have a trust that that's got too much, wants to start to divest some of its assets. And so it would say, well, let's create another trust. We create a trust, and we'll break off 20, 30% of our asset base, and we'll put it in that trust, and we'll get a new trustee service, and that will operate to certain beneficiaries, which may or may not have been included yet. In other words, in the interim of the time period that we're talking about, there may be new grandchildren, and there may be divorces, and there may be all of that stuff that goes on in daily life. And so the trustees have a job to keep on accounting for who are the beneficiaries, how much do they receive, who are the additional beneficiaries, and so forth and so on. So there's your static part, which is the first 11, 12 pages. And then you have the flexible part, which is towards the end, and those are the minutes. And in addition to that, you can also, the trustees, by unanimous decision, can make amendments to certain parts of the trust document that are allowed to be flexible. In other words, we have created an addendum to Schedule A. Schedule A typically is a personal property schedule where you would put, maybe you put stocks and bonds, or you'd put jewelry, valuable jewelry, or maybe a painting in there that you want to have protected by the trust, so it doesn't go into your estate. It separates it from your estate, and that's how it would be stored. It would be registered in the name of the trust, and you would be the benefit, or there may be other beneficiaries. So that's the static part and the dynamic part. Okay. Okay, the static part is that first 11, 12 pages, and that is why we call it an irrevocable trust, because once you sign that document, whatever has gone into the trust, you cannot take back. Can't take it into your own personal pocket. You can receive it through beneficial interest. You can receive it through salary that you might receive for taking part in the dynamic affairs of the trust on a daily basis. You may have part of it through the fact that you're one of the beneficiaries. And that's how it's irrevocable, in the sense that it can't be taken back. The assets can't be taken back, but it is, since it's not revocable, and there's separation of the asset from you as a person, then if something happens to you and your assets are in an irrevocable trust, then those assets can't be sued if you happen to have a liability against you, then your assets are not yours, so they're not going to go anywhere. Okay, the indenture we see is the intention of the grantor or creator. In this case, sometimes we have a nominee grantor and the client wants to be a co-trustee. And so I would, in a sense, be the creator or grantor, and we use a grantor service, somebody that's willing to do that for a nominal fee. And they would lend their name to be the creator or the grantor of this trust, and they relinquish all control, and therefore you, who really are the true client, may be one of the co-trustees, and then you will have the ability either as co-trustee, or you may decide that you only want to be a manager and have two other trustees. And so you can manage the daily workings of the trust with minimal guidance from the trustees. And the only part that's really important is that whenever you make a decision that's outside, let's say it's outside the realm of your weekly functioning basis. In other words, you might have a weekly expenditure of, say, $1,000, and you as manager may have that leeway to have $1,000 a week for taking care of any asset or property within the trust. And anything more than that, you would email your trustees and you would say, I need to have you think about this, and I need to have this amount of money for this particular project that I think will enhance the assets of the trust portfolio, and I need your permission to do that. And the trustees will either say yay or nay, and since it's all about having the intent be taken care of, then they're going to say, okay, let's do this, and these are the conditions, and this is how it's going to go down, and there's another minute. And all it does is every time that you make a decision with the trustees, you make a minute, and it's put into the trust document. Now, I would suggest that when you put the minute part of the trust together, you start with the current date. And then every time there's a minute and it's dated into the future, you're going to put that onto the top of the last minute. And so your running tally of minutes is the latest to the oldest. Now, if you function differently, and I'm sure some of you do, you may want to do the reverse way, and you may start with the oldest, and then you flip and you get to the back, and there's your most current minutes, and then you can go from there. It's truly up to you, and this is where the flexibility comes, is you and the trustees really have to get together and make decisions. I have a couple of clients who keep coming back, well, what should I do here? What should I do here? And I say, well, how about you get together with your trustees and you decide what you want to do with this process. I mean, because it's not mine anymore. I have written this incredible document for you. You have it. You've taken it to your trustees. You've gotten it all signed. Some of you have made changes. Some of you have made changes without asking me, and I don't have a problem with that as long as you don't come back to me later and say, well, I made a mistake on this. Can you rechange it? Because that's not what I want to do. If you have anything, you're welcome to make changes as long as you and the trustees have made that decision and the trustees have said, yes, we could do this. It's well within the realm of the intention of making the assets stable and productive. So that's the essence of that. And Tanzan mentioned earlier about how the trust is under the rule of law of contracts. So some people say, well, my bank doesn't want to open this trust. Well, the government has no ability to infringe on the right to contract. That's in the Constitution. I believe it's number 10. It's like 9 or 10. It's like the government shall make no rule that disallows the private contract of two or three people. So that's the rule of contracts. And that's what holds this whole trust document together, is your right to contract, your unalienable right to contract with anybody else on the planet. And it's private and irrevocable. I don't call it a common law trust. I don't call it any kind of name of a trust. I just say it's a private, irrevocable trust contract. That's the most simple term you can put it in. It's private. It's between you and one or two trustees, it's irrevocable. You can't take any of the assets back, and it's a trust document versus just a plain contract or a corpuscle or an LLC, because it's called a trust contract. So that's why we call it irrevocable, private irrevocable trust contract. Okay, next. What makes the minutes so important? Okay, trust minutes and amendments make the trust dynamic. Okay, that's all I can see on that one. But I'm going to say the reason that they make it dynamic is because they're going to be a paper trail or a dynamic record of what the trust and the trustees have done, whether it's from the past or what's going into the future or what's taking place right now. So this is the dynamism that the minutes portray, and it makes the trust very, very fluid and able to change directions when necessary. Doesn't matter whether it's a economy, the depreciation of a particular asset that's in trust, it's all on a daily, ongoing basis. So any managerial duties or any trustee duties need to be looked at on a regular basis to make sure that the trustees and the managers are keeping a very clean record of the trust minutes, trustee minutes, trust minutes, etc. The better record you have, the more stable it is. So that dynamism and the recording of that dynamism is what also makes it stable. It's not static, but it is stable. So the rest of this is Claudia. I'm just going to say that you and the trustees are always doing an ongoing process of how to keep the trust dynamic and how to adhere to the static demands that the trust wants to have for its beneficiaries. And it's a paper trail. How often? Okay. Doesn't matter how often. I think it's every decision made. If you're running a business, I have a couple of trust documents where I run a daily business, and I just take notes of, it could be my phone record, could be my notes to who I need to call and return calls to. Then that would be written down, and that would then at the end of the year or whenever I need to, I would have that record, that phone record, included in the trust minutes. And I may have my own particular email folder or phone record folder for those things that deal particularly with the trust. Okay, so that's the magic of minutes. Next slide. Okay, so this is where I like to be, and I'm very open to questions.
Okay, everybody, you can either put your question in chat or raise your hand by clicking on the raise hand icon. And if you're calling in by phone, press *9. While we're waiting for that, Randall, I would just comment that your creation of the ability of clients to be either trustee or appoint a friend as trustee or hire a trustee is rare, as far as I know, in the trust world. Yes?
Yeah, I think it is. And most people are afraid of that. But I've just looked over the record that I've had, and you and
No, it's kind of ingenious, really.
just glimpsed at maybe doing it, but didn't quite do it. And I said, hey, let's test this out. Let's do it. And so there's certain things. I mean, we last month we had the three hats, and how important it is to you have 2 out of 3, but you really don't want to have all three hats going. And so I have to constantly remind clients, I'm sorry, you got three hats, you got to take one off. Let's figure out how to make it happen. But thank you for the comment. I really appreciate that.
Okay, the first question is, can successor trustee also be beneficiary?
Yes. I have a number of clients actually where, let's say the mother has 3 children, 4 children, and she wants to be the trustee. She doesn't want to be a beneficiary. She wants her 4 children to be beneficiaries. So she could be a sole trustee, especially if she uses a nominee grantor. So she could be a sole trustee. You need to have a successor trustee because the banks don't want to have an open-ended no trustee available. So you would put in a successor trustee, and that could be your daughter who might not even take over for 5 or 10 years, but is available in a couple of years to take over. But by that time, the trust has a stable platform, and one of those beneficiaries could be the trustee for herself and for the other 3 siblings, and that works.
And when the primary trustee passes on or becomes unavailable and the successor trustee takes over and is still beneficiary, would it be required that she not be the only beneficiary?
Yes, I would suggest that.
Right.
Yeah, it's really not, it's all the laws that I see is that you can't be sole trustee and you can't be sole beneficiary. So if you are a successor trustee, then you really have to make sure there are other beneficiaries there. Now, a lot of us are dealing with the exchange, and so the projects that you have for your exchange easily can be other beneficiaries, which would supply that mechanism of you being far from the only beneficiary.
All right. Jim asked, would you put a car that is leased into a trust? If so, does it make sense to have this full trust set up for the vehicles?
No, never. I just wrote a client this morning, never put a car or an airplane or a boat into a trust that has assets in it, because all of those 3 things are liabilities. So if you're going to lease a car, if you're going to buy a car, buy it in your own name, and the trust can pay you either managerial fees or trustee fees to pay for expenses of the car. And then you can do it that way. If you lease a car, you decide to lease a car, and the mortgage company is willing to lease you the car, make sure that if it's under the name of the trust, that there is full insurance that is taken care of by the leasing company. If the leasing company doesn't want to take care of the insurance and it's on you or the trust, then don't put it into the trust. Just lease it under your own name. Better to keep any liability separate from your assets. I would just rather put it that way.
All right. PA asks, hello, Randall. You mentioned manager. Is that another category besides the 3 settler, trustee, and beneficiary? And can the manager be any of the above?
Okay, so the typical process is that the client is the grantor and would be the general manager and would be the only or one of a number of beneficiaries. So that managerial process is separate from being a trustee, and the trustees will appoint a manager, could be the grantor, could be somebody else. Um, a lot of times I just send out the blank managerial agreement, and then you may have 3 or 4 projects, and you might hire a manager for each one of those. And so that's a contract that you would have from the trust to anybody that's going to run a project or manage a process for the trust. And that could include the grantor, or the settler. So settler, manager, and beneficiary are 3 fairly synonymous names that go together.
All right. Paulette asks, do the minutes need to be given to anyone, the bank?
No, the minutes, I highly suggest that you keep the minutes private. If this is what I did the other day, I went in to get a new account, get another account for another process, and all the documents were signed. I had a copy. I took the original, I made copies of them, and then so the originals are placed back in a safe place. I took a copy of the whole document to the bank. I made an additional copy of the trust indenture, pages 1 through 11. I made an additional copy of the trust abstract, which is page, I think, 29 to 34, depending on your trust. Don't hold me to those page numbers, please. And I left that trust indenture and that abstract with the banker. But in the meantime, he got to look through the whole document, which was basically, he got to look at the second and third section, which is appointments and different schedules within the trust document. But at the minutes section, I had paper clipped that together so that he could not see the running minutes, the dynamic running minutes of that trust. And he was fine with that. He said, okay, this looks totally together. You've got all these parts separated by binders, folders, and yeah, we like the looks of this. We like the way you presented it to us. So let's go forward. So you make up a folder, you make a copy, you have it all separated, you take it to the bank, you leave them 2 sections that I just mentioned, and then you really want to have at least one trustee there. If you're the manager, if you're one of the trustees, then you could probably do it yourself. But you have to have at least one trustee at the bank to open an account. They will not allow just the manager to open an account for the bank. Most banks today want both trustees on the signature card, and they don't really want the manager. But if both trustees go to the bank and they say, Mr. Banker, we would really appreciate that this person is also on the signature card. And if they want your business, they pretty much will do it. But the trustees are the key people when opening up a bank account.
All right, thank you. We have from Marianne, how can someone be nominee grantor if the assets being conveyed do not belong to them?
Well, because a nominee grantor is just nominee in name, and they have gifted that aliveness to the trust by what we say $21 and other considerations. So they basically created a document that can go out to use for somebody else. So depending on how you played one of these roles, either grantor or trustee, either one of you, either the grantor or any one of the trustees, can assign assets to the trust for the use of the trust and the beneficiaries. So typically the trustees are not the people that assign assets to the trust. They can be. Sometimes if you have a nominee grantor and you have a nominee trustee and you are the other trustee and you are putting in your foreign currency into the trust or any personal property you have for the trust, then you would be the one that gets the benefit for those assets. And then you can also have other beneficiaries, your projects, or other people that you want to have those assets be given to it on a discretionary rate of return. So you don't have to be the grantor or the creator. You can also be one of the trustees that puts assets in the trust. You could be a beneficiary actually that has some assets and you want to put it into the trust for the overall good of all the beneficiaries. So that's possible too.
And that reminds us of the fact that there's no rule against any officer in any role giving assets or transferring assets.
Right. Right. It just can't be fraudulent, and it can't be necessarily for his personal benefit. He wants it for general use of the assets to the trust. And if he does put assets in and he wants a beneficial return, then he would be listed as a beneficiary for whatever percent is fair to him and the other trustees.
All right. Joyce asks, when can we change the co-trustee?
Anytime you want, but why would you do that? You either you appoint somebody that you totally trust, or you hire a trustee service that'll be very professional and you can trust them. The only time that really can fire another trustee is if he's creating malfeasance or he's trying to breach the trust. So it doesn't work that way. This is not about hiring and firing trustees at your willy-nilly. You have a protector's agreement within the trust indenture, but that's only if the trustee is not doing his proper job. So don't choose a co-trustee unless you want to go long-term with this person. It's the best I can say.
And she also asked, a trustee cannot be beneficiary also?
A trustee can be a beneficiary if he has some interest within the trust. In other words, if he puts some asset in, then he could be a partial beneficiary.
But not sole beneficiary, right?
I would not do that. And even with two co-trustees, I would suggest highly that only one of those trustees is putting an asset into the trust. If the other trustee has an asset, then I would have him create a secondary trust, another trust, and put his assets into that trust. I'm looking for maximum separation, not a conjunction of people putting all these assets in this one fund and then all participating in it, and nobody really has enough wherewithal to keep it separate. So be cautious there.
All right. Marianne asks, can I be signatory if I am the creator and a beneficiary, or does it have to be the trustee alone?
You would have to take the trustees to the bank, and they would have to encourage the banker to allow you to be a signatory on the account with them. That would be up to the bank. And you would probably be a signator on the account as an executive manager.
All right. Joyce says, after trust is opened, how do we open several accounts for different projects without having to think about taxes?
Well, you would just, the trust would open up whatever project it would. It would fund the project that it would like to fund. It would either set up another trust for that particular project, or it would just fund that project, and one of the trustees, or they would have a manager for that trust, and then whatever payback comes back into the trust would come into the trust asset portfolio.
And it can have as many bank accounts as it wants, yes?
Sure. And I talked to a client this morning, and I said, one of the ways that's economical sometimes is to, if you're in a state that doesn't have any high fee for an LLC, is to have an LLC be a storefront and run a project. The trust would fund that particular project by the LLC, and that LLC, the owner of that LLC would be like 96% owner of that LLC. And so the proceeds after expenses were taken would go into the trust. And the LLC would write off all the expenses, etc. And it could have as many storefronts as you want. Sell franchises. Trust could sell a franchise for every storefront that wants to open up. And that's how you do it.
Yes. And the trust itself has no tax filing requirements.
Correct.
Susan asks, why only $21 instead of more?
Well, in the days when silver was legal, $21 was considered a legal sum to place against opening up an asset base, I believe. I think that was the whole gist of it. $21, more than $21, that was a silver dollar, and that was payment for your word, or however they wanted to coin it at that time.
How much is silver going for these days per ounce?
12, 15. Depends on whether you get bulk silver, it's cheap. If you get silver blocks, I think I've got two currency people. One, gold is around 12 to 13.50 an ounce, and silver is 15 or so. And they advocate, 10 to 1. If you have an ounce of gold, you want 10 ounces of silver. But that's just a choice.
So let's say 21 ounces of silver is approximately $300 in current fiat currency.
Yeah.
And back in the 1700s, it was considered that if you had that much money, you were considered to be solvent. You were not a debtor.
Right.
So
if you had at least one silver dollar, I think you were solvent.
Yeah.
That was then, I believe. That's why my mentor from 1950 said, $21 or more in silver. And that was a standard, even though the Federal Reserve went off the gold standard. $21 silver was still considered a sum that would carry the weight of your word.
All right, and then Mata asked, does the nominee grantor get the EIN?
The EIN goes to the responsible party. So usually you, on the SS4 form, you can do it online, is you have the name of the trust and the address you want to use, and then you have the name of the trustee. And then down a couple of lines from that is the responsible party. And that's typically, in the old days, was either the nominee grantor or the grantor, and they would use their Social Security number to get the EIN number for that particular trust. And that's still fairly simple. You do it online. I give out instructions that are pretty explanatory. You go online between 9 and 3 o'clock Central Time, and the 5 days a week, and the IRS will give it to you in about 10 minutes. Now, I just was fortunate to get a link from a Canadian client that found it online for the Canadian number as well. So I haven't explored that yet, but I know she got hers online, whereas before we used to have to fax in the particulars. So it's all changing. I have clients in Europe that the government doesn't need a number. The banks don't care about the number. They take your personal ID passport number and they use that. Brazil is different. South America is it just depends on the system, et cetera.
You're right. So Mata's question primarily pertains to the countries where a number is required.
Yes.
And
And definitely that's the U.S. and I believe Canada, and have one client in Mexico, but he didn't tell me that he had any problem opening up accounts, so I don't know what the details are.
And our second question is a Social Security number required to get the EIN?
Yes, somebody will have to give that one up. And don't don't worry about it. It's just a number that's associated with that number and has nothing to do with coming back on you or coming back on anybody else. It's just the way the IRS operates. They want somebody's number. And the EIN number, they say, oh, you have to file a 1041, but there's really no requirement. It's just like filing a 1040. There's no requirement to file a 1040. It's strictly a volunteer basis. And the same thing with the 1041. There's no requirement to file. You just have decided to file because you volunteered. So that's a whole other seminar, as Tanzan and I both know very well.
I totally agree. Everybody, what Randall just said has been my experience too. And I've been using these trusts since 1993. And I've chosen to be trustee on the ones that I operate. You can do that, or you can hire someone else to be trustee. But whoever sets the trust up can choose who is the responsible party that gives the Social Security number for the EIN. And like Randall said, don't worry about it.
Correct.
Okay. Jim says, I had out-of-town company and missed last week's trust study group webinar. Will you be sending the group members a copy for re-listen? No, we're not going to send it, but it is posted in your back office. Actually, the first one is posted, and the second one is in the process of being posted. We needed Randall's approval of a few things first, and then it had some glitches. It had to be edited. As soon as the editing is done, we got it posted. It'll be in your back office on the BIC website where you log in, brillianceandcommerce.com/my account. And then you log in and there it will be.
Right.
All trust customers will have access to it.
Right. And Dominique did a really bang up job for that, and really recommend that you take a listen.
And Jim asked, or Joyce asked, can we use the same people from original trust to open other trusts?
I would change at least one of them. You don't want to just open up a second trust and use the same people. You need to, there's not enough separation there. So if you're going to do a second trust, have at least one other trustee, a new trustee for each one. Or you'd have to check with Dominique, but Dominique, because she's a professional trustee service, that may be an option for you to think about it for further down the road when you want to open up more trust. That could be a possibility. So yes, it's always there, but on your own, if you just had two friends, I would not use those same two friends. And you want to have trustees that are very savvy, and Dominique is devouring more books than I can get to her. So she's doing very well.
Okay. Mata asks, why would a two-member LLC not file a tax return? And she's referring to the trust being 95% of that LLC.
LLC is a state function, and that will have to file some kind of return.
Yeah, that was a misunderstanding. I think Randall did say that the LLC does file its return.
It's a simple, like a Schedule C. It has all the expenses, all the deductions, and whatever's left over goes to whoever the owners are. And those owners, um, and I said 95, but it could be it could be 50-50, could whatever you feel, or however you feel you want to have ownership in that LLC. That's totally up to you and then the trustees of the trust, and it can vary accordingly. It's not set in stone by any means.
All right. And Marianne says, would you recommend to open an account with $21 to get ready while waiting for the exchange?
I wouldn't open an account. They're just going to eat your $21 because most banks, if you don't have more than $200 or $300 in the account, they just take out $15 a month. So don't open an account yet. There's no need. When the exchange happens, you will exchange your currency, and then you will be led to wealth managers and to bank accounts, and then you can go forward like that. But unless you're using the current trust to do current day operation or business or activities that you like, then you don't really need it at this point. You have it ready to go for that exchange. In the meantime, if you want to use it for everyday activities, you're welcome to do that too. And that's what it's created for. Before this exchange came around, I've been writing trusts since 75, and people use it for all kinds of business. East Coast, West Coast, all over.
Marianne also asked, does Brilliance and Commerce offer services from professional trustees? And Marianne, BIC doesn't directly, but we outsource that to Dominique Hackett. And Randall, you want to tell them about her?
Oh, yes. She's asked me to mentor her, and I've given her bibliography, and she writes questions to me every day or every time she gets a little hitch, and I draw it out as much as possible, and she takes it and puts it in her brain, and I think she's adding notes to all her books, and she's quite adept. So it just keeps getting better.
Okay. James asked, what is the fee for a grantor nominee or a trust service? And basically, it's flexible and depends on what is involved. Dominique starts out at $50, $100, fees like that, and they go up depending on the services needed, what size of trust, how many people are involved, it's negotiable. There's a lot of variations. Anything else,
Right.
Randall, about that?
No, I didn't want to mention, but Dominique is very accommodating. So you just have to tag her with an email. And if you don't have that email, then you can get it. Do you have it at BIC, or you can ask me for it? Somewhere we should post her email. Townsend.
Well,
Or not.
maybe.
We'll put that to Dominique.
Yeah.
Okay. All right. That's what we'll do.
Paulette asked, do the trustees need to live near the trust, or are there advantages for trustees from different places?
Doesn't matter whatsoever. If you have two neighbors that you totally trust and they've been participant in your life all along, or cousins or hometown people, or there's no problem using people that are close to you. And doesn't matter. I have a client that was in the Midwest, and one trustee was on the East Coast and one trustee was on the West Coast, and I got them to all go to a Wells Fargo bank at a particular time, and the time zone was good for everybody, and they signed the documents in the Wells Fargo bank where they were, and it all went fine. So it doesn't matter. You can work it out.
It used to be that a lot of banks wanted you to show up physically in person, but more and more they're getting to where, okay, as long as you show up at a local branch in one state,
Right.
the other state will honor that.
Yeah, if it's the same bank, I think it's
Yeah.
probably true. Um, yeah, banks are fickle.
Okay. Mata asks, would you recommend the trust be 100% owner of the LLC, therefore a flow through with no return required?
No, that's two things. One is uh, I wouldn't have the trust be 100% owner of the LLC. I would have a real live person in there somewhere, either you or somebody else. I had some really good tax people here that suggested that, and what was the second part of that?
Therefore, a flow through with no return required?
No, because it's not you. It's not about you filing return. Excuse me. It's about the LLC, since it's a state entity, must file some Schedule C or something similar. So that's because when you open up an LLC, the state is going to say, where is your, return? Doesn't mean you pay taxes at all. Well, I sometimes I have to in here, like if I have an LLC here, I have to pay an excise tax. But if you open up an LLC in a state that doesn't have any state or excise tax, then all that income that goes into the LLC can flow directly to the trust.
And if 100% of its income were to flow through it to the trust, that would look kind of suspicious and it'd probably invite an audit. Yeah.
Yeah, I would, like I said, I wouldn't have 100% ownership. Break it up.
Yeah. We have another comment says, yes, I like Dominique's calls.
Good.
Yeah.
Yeah, it was just writing her the other day. She had said, I'm swamped with these questions. You got to help me. And so we just wrote out a scenario and she just took it all in. It was great.
Yes. So we'll be having a series of those posted in each trust customer's back office.
Yeah, I think having all of hers somewhere, and all our recordings that we have together, then people who get it together and finally get the rest of their trust document, at least the abstract, then and they become a client, then they can access both of us. And I noticed that I've been addressing to a lot of clients that they consider Dominique as some part of their process within the trust work, and it seems to be working out really well.
Marianne asks, what is the purpose of an alternate acting trustee?
Well, that would be like a successor trustee, I would think. I've never heard that term before, but a successor trustee would pick up the ball if something happened to the present acting trustee.
Right.
That's why the bank wants some name as potential successor trustee, because if something happens to you, they don't want to be responsible for dealing with this trust in particular.
It may be that successor is more of a permanent position, whereas alternate acting might be temporary, like if the primary one is temporarily unavailable.
I guess you could have the successor trustee. I could set up a contract with the successor trustee and say, I'd like you to fit in temporarily occasionally and then fit in permanently when I'm, gone away.
Mm-hmm.
So yeah, you could do that. You work it out with your trustee.
Joyce says, oops, I meant to say successor trustee instead of co-trustee. Okay, thanks, Joyce. I guess that what you said still applies, though, Randall. And James asks, can a trust not be the owner of the business and therefore avoid the LLC altogether?
Sure. Uh, you don't need an LLC to have a business. The trust can operate 2 or 3 businesses on its own. I only use that example as one way to reach out and have different storefronts. One thing about the LLC is, I think this is why I was encouraging it for a while, is that let's say you have a particular project and you set it up in LLC and you have another one that's really separate and different from the first. The thing about the LLC is that the liability of the first LLC only touches itself. In other words, there's no ability to go upstream and get any asset within the trust, even though it's an owner of the LLC. And that's why they brought LLCs into being, as they wanted a limited liability company that could run expenses and run profit, but not have it go, not have the liability reach up to the investors.
I would agree. Many of us operate businesses directly from the trust without any intermediating statutory entity.
Sure. If you only have one business, then there's no problem. And even if you have 2, but they're not major storefronts. I mean, we're talking about a storefront that is possible that could create a liability. If you're just doing consulting, I would still, keep it separate if you're doing 2 different really projects, because somebody that you're consulting might not like what you did and try to sue the trust for it. And if your other consulting business is still in the trust, then that would be subject to that as well. So you're going to have a couple of projects and you want to run them at the same time, then consider a storefront. And if you need to talk more personally about that, and if you're a client of mine, then please feel free to do that.
And Marion says, can there be more than one successor trustee?
Sure. You just have to, I would suggest you let them both know that, let's say you appoint 2 successor trustees. Instead of the document or the appointment of successor trustee, you could write 2 names in there. If they've both agreed to be successor trustees, then you could appoint them at the same time to be successor trustees. And that would fly too. But I would say you want to make sure that both those people are willing to work together when the time comes. So be looking at that as well.
And she also says, if I want to sell ebooks through the trust, how do I prevent the ebook store from charging taxes? I'll just comment, Marion, they're not going to charge income tax because they're just the vendor. If you're talking about sales taxes, I don't know that the trust could exempt you from that. Randall?
Yeah, I would say that the sales tax, the seller is required whenever he sells an ebook to tag a sales tax on there, whatever it is, probably.
Yeah. That varies by state.
Right, and that's up to the vendor. Vendor is responsible for that.
Right. For example, the state of Oregon doesn't have any sales tax.
Fine. Yeah.
So
that works.
Maybe you base your trust in Oregon.
Well, base your sale. Have the seller be in Oregon.
Or seller, yes.
Or Texas, or North Dakota. One of those states up there has no sales tax.
Mm-hmm. Joyce says, should we get different bank accounts for different humanitarian projects or open trusts for them?
Wait till it happens. There'll be plenty of time to put your ducks in order. And I don't want you to try to put your ducks in order now because you may get run over by a tank.
Everything may change.
That's right. There's plenty of time.
Yeah.
And we'll have information on that as well.
James says, how would a trust deal with employee income tax?
Okay, so I would caution a trust from having employees. I would say this is the time to look at opening an LLC or some kind of separate entity to do employee work relationship stuff. It would have to get employee insurance, liability insurance, etc. Keep it separate from the main trust, and then whatever's left over at the end of the project or whatever then would come back to the trust. But there's no liability trying to sneak its way up into other assets in the trust.
Yeah, and another way to go is to have independent contractors instead of employees.
It's still separated out. Those independent contractors would be contracting with another entity rather than the trust.
Yes.
We're talking maximum separation from assets.
I think
I've had my tough luck of getting beat up, but a friend was up 30 feet and I told him over and over again, tie yourself in and make sure your trust is up to date. And sure enough, he fell 30 feet and broke a good portion of his body. And then he had to go and make sure that he had the right paperwork and could go and file. And man, if he had done that first, you wouldn't have had a problem. But so be aware.
Yes. So James also asked lease employees, and I guess what Randall said applies to that equally as well.
You can lease employees, but if you're really going to have that, I would have you consider another entity to do that particular project.
PA asks, does it matter what state the trust is registered in?
One is it's not registered, and two is no, it really doesn't. Because I want you to think about using your own home address or a mail stop address near you so that you would have ready access to any correspondence. But it doesn't matter what state you use as an address.
Yeah, and maybe the word registered isn't quite right, too, because it's not really registered.
No, it's not registered. That's a statutory process where you register something and get a state number. You don't want to do that.
And he says, can you have an address in a state where you do not live?
Sure, if you have mail service.
Yeah.
I have that. I have a number of clients in Sweden, and we're using a mail service, and they're getting EIN numbers as foreign grantor trust. So that's all available.
He also asked, should the trust be registered offshore? PA, I think you're thinking in statutory terms.
Right.
These trusts do not get registered at all, period. Just forget that idea, okay? And you don't need to register it anywhere, in particular offshore. If you're seeking independence from the local laws, you already have that.
Right.
By the intrinsic nature of the way the natural law trust is written.
Yeah, and there may be some confusion because when you go offshore, you basically have to get an international business company, and that's usually through the state or the country's residential process. In other words, when we were working out of the Bahamas, we had to register that particular company with the country, but they didn't really care beyond that. But it was registered, and so you had to have a legal resident alien there. So if you were in the East Coast and you wanted to have a Hawaii address, we could do that, and we could get a mail stop service, and then you would have to pay for that, and you would use the Hawaii address for the trust, and then you'd have any correspondence shipped to you on a regular basis.
Right.
It's just expensive, and you really don't need it unless you're doing multiple projects.
Marion says, thanks a million. James says, can you have a number of different addresses even in another country?
Why? What? I'd ask why.
Yeah.
You know, you can have different mail stops. I would think you could have, but why? You know, it's like every time if you had an address in France and an address in Germany, you would have all these addresses, and you'd be paying this mail service for what I think you really don't need.
He says, I move around a lot.
Well, have a mail service in one place, and you can always have them send the mail to wherever you are currently. That's what I did. I had a mail stop in Sausalito in California for 15, 20 years. And wherever I went offshore, I would either come back to get the mail. It was a mail stop for sailors, basically, out of San Francisco. We all used it, and you could go anywhere. And you either went back every so often and picked up your mail, or he would send it to you for a fee.
Point being, basically, then the trust has a single location where it receives mail, but the officers can be anywhere they want. And communication, of course, is by email and phone.
Correct. All the time. And, you know, we have really good email. We have texting. You have Skype. I mean, it's easy to do Skype with your trustees now. That's a face-to-face with the trustees. You can even do Skype with your bankers if you've set it up right and you like your banker. You have Proton Mail for good privacy. There's other good private mail supply, although I have to tell most clients I don't want 6 different private mail service. I just want, usually, basically I use Proton Mail, and that's a private service, so I have everybody get that. It's free. So you have encrypted mail service.
It's free up to 1 gigabyte of storage.
Yeah. It's cheap enough, that's for sure. Okay, what else? Anybody? Any far off questions? I see the hills of Santa Barbara behind there and saying, oh, yes, I remember those hills.
So minutes. Well, we can wrap it up, I guess, for 5:15, at least West Coast time.
Sure, it's been an hour. I guess we're
15
minutes.
Yeah.
That's 60 minutes. Holy smokes.
Well, that's the whole topic. Is minutes.
Why?
I guess the term minutes must have come from old England when maybe they were holding meetings and somebody was designated to keep notes of what was going on. Minute number such and such. Mr. Smith said so and so.
At this minute.
37.
Right.
Jones commented on.
Anybody else? Otherwise,
Joyce says she misses your pink cap, Randall.
Oh, well, someday, and I'm hope to hold myself responsible, I want to take this computer with a camera and go down to the beach and do a session at the beach with the water in the background. That's just screen.
Okay.
See how it goes. Okay, everybody, thank you very much for listening. Tanzan, you're a brilliant moderator again, and everybody knows how to get a hold of me pretty much.
Thank you. And Tuesday, June 19th, 2019 is our next one. And before that will be Dominique's trust study group for those who have a trust. So thank you. Aloha and mahalo for everyone who knows a little bit of Hawaiian. It means thank you in Hawaiian. And you add a little bit more to it, Randall.
Mahalo a nui loa. Thank you very much.
Yeah.
Aloha from Kauai.
Wednesday, June 19th. Yes. Thank you, everyone, for your comments and for attending.